Anderson Multifamily team coming to you from Seattle, Washington. This week marks the end of September. Summer went by fast. Wanted to recap the month and share with you a couple of articles that I found super relevant this month. Starting off with, this is Zumper's National Rent Report. What's interesting about this report to me is what's not on it. In previous years, Seattle was always part of the top 10 most expensive markets in the nation. Right now, Seattle is ranked number 17 in the nation. One-bedroom units are still renting for below $2,000. You'll see New York over $4,500. San Francisco's dropped down to just below $3,200. Previously, San Francisco was $3,700, and Seattle was about $2,000. So we're still priced about 40% below San Francisco, over 60% below New York. Seattle is renting for a bargain, which means we have a lot of room in rent growth, and buyers are starting to see that we're going to see rents massively ramp up in the coming years. And we're starting to see that in buyer underwriting, which leads me to the next article that I found super relevant. 4 caps are back, folks. We've been waiting for it. This is a record sale in the Lower Queen Anne market. GID just bought a Gray Star building. What's interesting about this is the sale price was $416,000 per unit. Not a massive sale price by standard metrics. We were selling units in Seattle, $500,000, $600,000, almost $800,000 unit topped out our market in 2021, 2022. But during the trough of this market, we saw brand new urban apartment units going below $300,000 a unit. That has changed. That bargain buying season is over. I'm saying now 400 is the new 300. That has changed. And mark my words, by the time we end 2025, urban apartment buildings in Seattle will be priced over $500,000 a unit. So the buyers are back. What are we seeing with their underwriting? We're seeing mid-4 cap underwriting in urban markets, 4.5 to 4.75. Some deals are getting done lower than 4.5 cap. We're seeing terminal cap rates come in sub 5 cap, again, 4.5 to 4.75. And also what's really fascinating is we're seeing buyers underwriting massive rent growth, maybe not double digits, but at least high single digits in years 2 and 3 of ownership, although the data providers aren't showing that. So a big difference in buyer underwriting. We are going to start to see pricing surge in apartment buildings in the Seattle Bellevue market. And we've been talking about this for months. We're seeing it in the sales data that with closings right now, we're going to see more of it. Moving on, this is an article I wrote earlier this month, 5 reasons why Seattle wins. And what I'm talking about is in the Pacific Northwest, I see the market dynamics massively improving already. What I'm talking about is the long-term dynamics that made this market absolutely a terrific market to invest in. The last market cycle are demonstrating themselves again. Seattle has been on a risk-off non-buy list for a lot of investors for a long time. That is changing. I was down traveling on the West Coast earlier this month. Buyers are back. There's a lot of interest in the market, and we've seen a definite change. We're coming into BOV season where lots of owners are wanting to know what the value of their building is. They want to know now so they can benchmark as the market improves and when is a good time to sell. I highly recommend if you're considering a sale, don't wait for the sale. Let's talk now. Let's figure out a baseline value. Let's understand how to improve operations to hit peak pricing if you're looking for an exit sometime in the next 12 to 24 months. Really excited that the market has picked up. We have a lot of volume coming on the market. Would love to talk to each of you. We're coming into busy event season. We have a big investor forum coming up on Thursday next week. If you haven't signed up, please do sign up. It's always a great event, and looking forward to speaking with each one of you. Have a terrific weekend and look forward to speaking with you soon. Take care.